Hi and welcome to today's video update. A little bit different for you. I've got Dan on with me and Dan Witchall. And a week or so ago, we talked about tax. And this video is really all about UK residents. And Dan is a qualified accountant, and he got in touch on the back of the video that I did based on capital gains tax for traders and said, Charlie, I think there might be a couple of things I might be able to help you with regards to traders and their potential tax liabilities. Now, just as one disclaimer, we have to say, look, everybody's personal tax situation is different. And so whatever comes out of this call here with Dan here today, you have to sort of take it like on my previous video that everybody's personal tax situation is different and to seek advice. I will be giving Dan's email address out at the end of this video, and I'll put it in the description box below this video as well on YouTube, so that if you wanted to contact Dan about your personal situation, then you can do so, because Dan's very kindly come on and done this with us. So Dan, thanks ever so much for coming on and doing this Zoom chat with me today.
No problem.
And so, yeah, you saw my rubbish video on capital gains tax last week and said, Charlie, there may be a couple of things that are wrong. So should we go through just what a grey area this whole thing is?
It is a grey area. It's intentionally a grey area been made by HMRC because they want to tax the traders that make money, but they don't want the traders that lose money to be able to use those losses to offset against other income. So it's intentionally grey, and it depends sort of how they classify you as a trader, or even how you classify yourself, and then let them ask questions afterwards.
Yep. Okay. Yep. Understood. So what I've found over the years is that the majority of traders that we come across aren't actually outright full-time traders. They usually have another source of income from either a business, or they actually still have full-time jobs or other work commitments of some kind or other, and they are trading, but it's not their only source of income. So what would you be saying to those types, who I would say that fit into the majority of people out there?
I'd say if you have another primary source of income or another taxed income, then you're not classified by HMRC as a professional trader, regardless of your
how good you are,
your respective profits, etc.
Yeah.
I mean, you could earn £1 million a year from trading, but you could have a 70 grand a year job. The trading would still be an additional income. It wouldn't be your primary source because you've got taxed income. So you'd still possibly come under amateur trader. Maybe I shouldn't have said £1 million. I mean, HMRC would probably still like to have a chat with you if that was the case. But if you have another income that you pay tax on, then especially regarding the spread betting side of trading, that would just be classified as winnings, so to speak. And then with the CFD side, it'd be chargeable to capital gains tax.
Right. Okay. So, I mean, a lot of people are going to be thinking, well, I'll just spread bet then. And that's down to me to discuss, I guess, that whether people should spread bet or go into more direct access type trading platforms, which offer better execution and cleaner execution. And there are cost savings involved from doing that. And that's how I always see that actually, yes, you can spread bet, and there's some good reputable spread bet brokers out there in the UK. But they're never going to have as good execution as an ECN type provider. And so sometimes the way I see it is the cost savings that you might get by not paying tax in a spread bet account are going to be offset by those few extra stop outs that you might get, or the add up of those extra pips on every trade you're doing, especially once you're trading with larger accounts. But the average person is trading with less than £10,000 in their trading account. So with these potential new tax rules coming in, what should we discuss? Is that really going to affect them? And what are your views on these tax rules, these CGT tax rules? Because yeah, there's a few different interpretations of that, isn't there?
I think something we can all be fairly certain of is there are changes afoot. I mean, it won't just be CGT. It'll be there'll be relatively large tax grab across lots of things. Where the government haven't helped us is they scrapped the autumn statement because of COVID. So it's the sort of thing that we would have found out by now what they were doing, and we'd be able to use the period between now and 5th of April, probably, or 6th of April rather, when it comes in, to be able to advise clients and to move things around and be more tax efficient. But you know, I can see it being announced late March, and then giving everybody a fortnight to adjust to it and act upon it. So I'm sure my phone or my email account will be quite busy at that time.
Yeah.
But regarding CGT, I've seen, you know, we'll start with the annual exemption. It's currently 12,300. Obviously, if you've got a 10,000 trading account that's chargeable to CGT, you're gonna have to be making well north of 100% a year to have to worry about that. Obviously, depending on any other gains that you make elsewhere in your affairs. So they'll drop that. I mean, some people have said 2. I think they'll be a little more generous, maybe 5, or somewhere in that bracket maybe. So again, with a typical trader, you're still talking at 50% a year for it to have an effect.
Yeah.
So it won't affect that many traders, I wouldn't have thought. I suggest don't panic. I mean, if it is a problem, then you're doing well as a trader.
Yeah.
Regarding the rates, a lot of people again think they're going to just mirror income tax rates, which would make it, you know, simpler from an accountant or tax advisor's point of view come the year end. But I don't think they'll go all the way to 20 and 40%, because then all traders will want to be charged to income tax so they can offset their losses elsewhere against other income, which HMRC don't want, because the majority of traders, you know, lose money. So they'll still want them to be declared as capital gains, I'm sure. The fine detail obviously is yet to come out, so everybody's still speculating, but given the potential tight timescale we'll have, it's well worth trying to think ahead, at least, if not do anything right now about it.
So although that Times article, I think it was, where I first read it, was suggesting that the threshold might come to 2,000, down to 2,000, you think it might not go that low? It could be more 5,000, let's say, as the tax-free threshold is concerned.
Yeah, it could well be 2. It could well be 2, but again, newspapers are newspapers. They're always going to report it at the worst case scenario, I believe. Worst case scenario would be, you know, like you say, 2,000 probably, and for the rates to go to 20 and 40%. I mean, the rates before they got reduced to 10 and 20%, they were 18 and 28, which is still the same for gains on residential property. So they would go back up to that as a minimum, I would think, if not slightly higher. But yeah, well, I'm sure there'll be plenty of discussion about it between now and then, and they'll come out with something, along with a few other measures that people probably haven't reported on yet.
So what advice should we be giving? I'm saying, when I'm saying advice, I mean this loosely. General advice could you be giving to any traders who are a bit concerned about a potential tax liability once this all changes, if they stayed with CFDs or Forex, or, you know, that type of a taxable sort of trading? What could you say to them now to give them some peace of mind?
Definitely seek professional advice. You know, the time spent going through, you know, Google searches or looking on the internet for answers would be saved by giving, you know, a qualified accountant or tax advisor a quick phone call that could very easily explain something to you. Obviously, always keep records anyway, because, you know, all your trades during the year could come under all 3 classifications. Like I said, some could be speculated, some could be like a self-employed trader, and some could be looked at as an investment. But that's, you know, that's good practice. As far as those minimizing potential liabilities, if you've got a spouse or a partner who's not utilizing their allowance. You could potentially have a joint trading account or a trading account each, or whatever suits. Again, it's very individual to your own scenario. You could go further. You could even trade under a limited company umbrella, which that comes with a lot more consequences, and there's more things to think about, but I won't go into all them now.
But that type of thing would really be for people with larger sums of money, not with someone who's got 10 or 20,000. I wouldn't have thought, would it?
Yeah, unless they're using up their allowances elsewhere, or if they're, if it looks like they're going to be paying any tax at 40%.
Right.
Most self-employed traders, I use traders in the term of not just forex traders. I mean traders in general, self-employed people, at the higher tax rates when they would be looking to incorporate their sole trade anyway. So they're just charged to corporation tax. Again, corporation tax rates could suddenly go up as well in the new year.
Yeah.
They were supposed to be down from 19 to 18 and 17, and that never happened. So they seem to be reversing that.
Yeah.
I mean, always plan ahead when you're disposing of other assets. You might, alongside trading, I don't know, some people have property, some people buy and sell shares on a longer term basis. So think about that in advance. You could always extend your basic rate band as well. Things like gift aid donations or contributions into your pension, they have the effect of extending your basic rate band, so you could get more of your income taxed at the lower rate.
Right. Okay. Yeah.
The 10 and 20% as it is now, you could get more in the 10% bracket. I know that'll probably rise, but so if you put 8,000 into your pension during the year, that gets grossed up for one in your pension, so it gets grossed up to 10,000, then it gets added on to your basic rate band. So instead of anything you earn over 50,000 as your total income, that would push that up 10,000. So
yeah,
you effectively get tax relief twice on that, which is quite handy.
Yeah. Okay. So we've got a few bits there to cover off there. For some people, they're just going to stay with spread betting anyway, and so they're fine. Some people will probably, if they have had CFD accounts, they might consider going to spread betting, but there are consequences with that, and it's not necessarily the be all and end all either. But I think the main thing to take from this is to maybe get some advice, and we're going to give you your email address here for people that need to, if they haven't got an accountant and they would like some advice. But certainly for a lot of people who are trading with smaller accounts, they're probably going to be fine anyway.
One more thing, sorry, on the capital gains tax side, because we've mentioned if it was charged to income tax, you get and you make a loss, you get the flexibility of offsetting the losses elsewhere. And the capital gains tax, you might have made losses for a year or two when you started trading, and you might be profitable now. You do have up to 4 years to claim losses for capital gains tax purposes. So if you want to suddenly report them now to the revenue, you can go back 4 years, and at least you've got those losses sitting there to offset against any future capital gains.
Right, perfect.
Could be useful for a few people.
Yes, yeah. So if someone has a losing year, then they but it was a year or so ago, then they might still
it's not something anybody would report to HMRC because there's no tax consequences. But if they're aware of the loss, then it sits on your account until you've got gains to cover it.
Got you. And one thing, coming back to what you said about keeping records, I mean, a lot of brokers, they keep that, they provide tax or records anyway, that you can use for the tax man. So for anyone thinking, oh my God, have I got to log all this down and keep spread? Not necessarily. No, most brokers,
I mean, everybody provides monthly P&L statements and stuff, but
exactly.
it's just solid advice to get everybody to keep records.
Yeah, great. Okay, well, hopefully that's been of real use to some of our viewers here. It's a slightly different video for today. This is going out at the end of the week, maybe Saturday. I don't know when this is going to get uploaded, but hopefully this has really been of useful to some of our viewers as regards to this potential for a change in capital gains tax, which looks like it's going to come next year, and that if people have got a concern, then do seek advice. If you've got an accountant, then do have a chat with your accountant. If you haven't, then by all means, you can email Dan. Dan, what's your email address?
It's daniel@davisandlewis.com.
Perfect. I'll put it into the description box below. Dan, thanks ever so much for your help here and having a conversation with me. And hopefully today's video has been of use to people. Take care for now.